Europeans will soon be able to forget about packing a jumble of different chargers for their gadgets. The EU on Tuesday agreed rules that will require a standard charging port for phones, tablets and other devices. It's a world-first move which Brussels says will save consumers around $267 million per year. Euro MP Alex Saliba set out the change.
So today we have made the common charger a reality in Europe. European consumers were frustrated with multiple chargers piling up within their homes. Now they will be able to use a single charger for all portable electronics, which is an important step to increase consumer convenience.
The move follows complaints from iPhone and Android users about having to use different chargers. Most Android phones use some type of USB port, while Apple favours lightning cables. Now the US tech giant won't be pleased by the EU ruling. It has long argued that such a move will stifle innovation. But Internal Market Commissioner Thierry Breton says there are big benefits, which go beyond consumer convenience.
These new rules will save more than 1,000 tons of electronic waste per year. Could you imagine? Just for one regulation? Yeah, and also in addition to an annual reduction of almost 200 kilos of CO2, which is an equivalent of 10 million smartphones, and 2,600 tons of raw materials.
By the autumn of 2024, USB-C connectors will be the standard. Since the rules will also cover cameras, e-readers and other gadgets, they will also affect makers like Samsung and Huawei, not just Apple. The EU will also have the power to harmonise wireless chargers, which are fast catching on in popularity.
Less than 3 weeks after reporting dismal results that rang alarm bells on Wall Street, Target on Tuesday again warned of trouble ahead due to unwanted inventory as decades-high inflation continues to upend supply and demand at U.S. stores. Target cut its profit margin outlook for the quarter, which it had just issued May 18th, and said it would have to cancel orders or offer deeper discounts to clear out inventory. The surprise revision comes as soaring inflation has changed U.S. consumer shopping habits, catching many retailers off guard and forcing them to offer more discounts. Target as well as Walmart had reported a much steeper than expected drop in quarterly profit last month, sending shock waves through the retail industry. At the time, Target said its inventory rose 43% compared with a year earlier, as demand for high-margin discretionary items such as kitchen appliances and TVs evaporated in favor of necessities like food and gas. Target's strategy to keep most of its products affordable compared with its rivals is proving to be costly, with the company now saying it would raise prices on some items to offset unusually high transportation and fuel costs. But Target maintained its sales goals for the year, prompting some Wall Street analysts to say the company's aggressive measures to offload inventory could help it come out on top later in the year. Shares of Target fell 7% in morning trading, but had pared most of the losses by midday.
Senator, we're seeing high inflation in almost all developed countries around the world.
U.S. Treasury Secretary Janet Yellen was in the hot seat Tuesday. In opening remarks to the Senate Finance Committee, Yellen said the U.S. faces what she called
unacceptable levels of inflation,
but said much of it was caused by residual snarls in the global supply chain and the Russian invasion of Ukraine. Yellen has come under fire from Republicans after admitting she was wrong last year in forecasting that inflation would be transitory and quickly subside. Here's Republican John Thune of South Dakota.
But do you still view inflation, which remains near a 40-year high, as transitory, or do you expect an extended period of raised inflation?
Well, when I said that inflation would be transitory, what I was not anticipating was a scenario in which we would end up contending with multiple variants of COVID that would be scrambling our economy and global supply chains, and I was not envisioning impacts on food and energy prices we've seen from Russia's invasion. So I do expect inflation to remain high, although I very much hope that it will be coming down now.
Republicans have blamed the Biden administration's policies, particularly the $1.9 trillion American Rescue Plan passed in 2021, for fueling the fastest inflation in almost 40 years.
And do you think that it is at all attributable to the overheated economy that was accelerated by last year's $1.9 trillion partisan spending bill?
Look, when President Biden took office, the United States faced a really horrendous problem in that it was projected that unemployment would stay extremely high for many years.
Yellen said the ARP fueled a robust recovery and argued that the U.S. economy was now moving from recovery to stable growth and was in a good position to tamp down rising prices. She also urged lawmakers to act on the White House's proposals for clean energy and prescription drugs to bring down costs for consumers.
Wall Street ended with gains on Tuesday, with Apple, Microsoft, and other tech shares leading the market higher, despite a warning from Target that weighed on retail stocks. The Dow finished 0.8% higher, while the S&P 500 and Nasdaq each ended up about 1%. But CFRA Research's chief investment strategist Sam Stovall said the recent rise in equities is only a relief rally and sees more pain ahead in the near term.
I believe that we are in a rally within a bear market. We likely have further to fall, maybe even to about the 3,400 level on the S&P 500 before all is said and done. But because the sell-off started so early in the year, it gives us a greater chance of posting a positive full year, or at least minimizing the sell-off that could have been reported.
Gains in Apple shares came despite news earlier in the day that the company must change the charging port on iPhones sold in Europe by 2024 after EU countries and lawmakers agreed to a single connector for mobile phones, tablets, and cameras. Shares of Target fell after the retailer said it would have to offer deeper discounts and cut back on stocking discretionary items as inflation continues to upend supply and demand at American retailers. That dragged down other retail stocks, including Walmart, but not Kohl's. Shares jumped after news the department store chain entered exclusive talks with retail store operator Franchise Group over a potential sale that would value it at nearly $8 billion.
Secretary, do you agree with the San Francisco Fed that the nearly $2 trillion March spending package was a significant causal factor in the high, increasingly broad-based and accelerating inflation that we observed this past year?
Senator, we're seeing high inflation in almost all developed countries around the world, and they have very different fiscal policies. So it can't be the case that the bulk of the inflation that we're experiencing reflects the impact of the ARP.
So was it a causal factor, would you say, that $2 trillion when we had $1 trillion unspent? So do the quick math here. It's about $3 trillion that was put into this economy from December through March of 2021.
So I guess the way I see it is when President Biden was inaugurated, he inherited an economy with very high unemployment, and the Congressional Budget Office and other forecasters were envisioning that this could last for a very long time. And we had to address the possibility that this could be a downturn that would match the Great Recession. And so in designing a policy, there are various risks that need to be taken into account. Of course, inflation was one of them, but the overwhelming risk was that Americans would be scarred by a deep and long recession, and that they would lose the roofs over their heads and not be able to feed their families.
Right. Well, I respectfully, I mean, if there was a forecaster who was worried about the high unemployment rates, that forecast was, I think, massively off, and we're seeing now the biggest challenge, of course, is just families cannot afford to keep food and fuel.
Well, Inflation is the number. There's no question. I don't disagree with you.
Talk about OECD for a moment here and China's compliance.